Welcome to Alpha Recap. Markets were closed for the day, and we're here to run through the biggest stories and what moved tape after the close. As always, if you have questions, you can reach us at stockalpha.ai. So, let's dive in.
Thanks for having me. There was a lot packed into today's session. Leadership moves, technical pressure in big tech, heavy volume in exchange-traded products, and some long-horizon thematic shifts around AI and digital banking.
Let's start with the top headline. Pfizer confirmed its chief financial officer, Dave Denton, will leave in August. That's a material leadership change.
Yeah, that's right. When a finance chief departs, analysts immediately turn to filings, an 8K, the succession plan, and any language about internal controls or guidance continuity. That's exactly what's happening here.
So, what really stands out here is how markets treat finance-level departures differently than, say, CEO changes.
Exactly. When you step back and look at this, leadership at the finance level often triggers short-term sentiment moves. People worry about forecasting continuity and control processes, which is why wording matters in the early filings. Analysts will be parsing any statements for reassurance that guidance stays intact and for who's named to oversee the transition.
Switching gears. Tech was under pressure, specifically around one large-cap name that traded near a 52-week low and had steep hourly drops.
Right. Microsoft finished the day near its low, and data showed sharp hourly drawdowns, some double-digit percentage moves in compressed windows. That's a technical stress point for managers with big growth exposure.
That puts a spotlight on risk managers and short-term traders.
Right. And the other thing is option activity and implied volatility tend to spike in that environment, which can feed back into hedging flows.
Let's talk about the heavy turnover we saw elsewhere. ETFs and leveraged products were a headline feature of today's tape.
So, the tape was dominated by outsized moves and big volume in those products. To give listeners a sense, one Bitcoin futures exchange-traded fund fell by about 2% to $8.73 on roughly 320 million shares. A semiconductor inverse fund dropped just under 4% to $4.45 on about 640 million shares. Another leveraged ETF fell about 5% to about $191.82 on roughly 198 million shares. And another short-leveraged fund actually rose by about 2.5% on roughly 337 million shares.
Those are huge numbers for volume. What's the takeaway there?
Heavy volume in leveraged and inverse products can accelerate price discovery and widen spreads. Traders should monitor whether selling persists into tomorrow. But for longer-term allocators, these often look like flow-driven volatility events rather than permanent fundamental shifts, unless there's fresh news behind them.
Big move.
Another structural item today, Aberdeen National Municipal Income Fund, announced a special all-cash distribution tied to a reorganization into Aberdeen Municipal Income Fund. That kind of payout ahead of conversion changes yield profiles and tax treatment for municipal investors.
And Canton Strategic Holdings was named for Russell inclusion, which typically brings mechanical buying, right?
Yeah, that tracks. Inclusion in the Russell 3000 and Russell 2000 indexes usually triggers passive flows as funds rebalance, which can improve liquidity and create a near-term bid for the name.
We're moving into broader thematic stuff now. The Dubai International Financial Center released a report calling digital native, AI-driven challenger banks the biggest banking shift since 2008.
That's a pretty bold thesis. The DIFC report elevated AI and digital banking as multi-year themes and essentially issued a call to action for incumbents and fintech investors. It suggests pressure on legacy fee pools and margins unless legacy banks adapt.
When you step back, that ties directly into demand for cloud services and silicon that support AI productization.
Exactly. Analysts will be watching big-cap cloud and chip providers for commentary that shows productization supporting challenger bank scale. Earnings talk from those providers could validate the DIFC thesis, or at least provide signals about infrastructure readiness.
On renewables, Envision Energy and EMEA Power signed up a 500-megawatt wind project in Egypt, taking their portfolio there to about 1,000 megawatts.
Project pipeline and financing milestones matter a lot for infrastructure investors. Large capacity additions in emerging markets are reminders that execution and offtake agreements drive value over time.
And there was an interesting number on ultraviolet sensors. Persistence Market forecasts growth from about $5.2 billion in 2026 to about $21.6 billion by 2023, implying a compound annual growth rate of about 22.6%.
Honestly, I was a bit surprised by this one. Regulatory tailwinds around UVC monitoring are creating industrial and compliance demand, and suppliers' earnings will be the next place to validate backlog growth.
Brief reactions.
Right.
Moving to consumer and retail. PopSips expanded into roughly 2,000 more Target, Walmart, Kroger, and other stores, a six-fold footprint increase since late 2024.
That's the classic early growth lever: distribution expansion. If velocity holds, it can translate into faster sell-through and higher reorder rates. But the proof is in the velocity data and retailer reorders.
And Scott & John's landed Costco placement in the Southeast and Texas for a frozen meal, while Rapoo announced 20% Prime Day discounts on peripherals.
Those Costco and Prime Day levers can be extremely effective for trial and repeat purchase. Retail windows like Prime Day are short but intense. Monitor sell-through, not just placement.
Let's cover a few operational and talent headlines. ACR opened a new distribution center in Stockton, California, tied to a cited 200% earnings growth outlook for the related real estate business.
Operational capacity and regional coverage often precede revenue gains if utilization ramps. Investors should watch utilization rates, not just openings.
A wealth firm hired a veteran advisor, bringing about $725 million in assets under management, and opened an office in the Chicago North Shore area.
Breakaway advisor moves are a visible metric of platform competitiveness and can accrete fee revenue. Again, watch for posted AUM transfers to confirm the move.
In healthcare, a regional hospital completed a $19 million cardiac cath and electrophysiology lab expansion with pulsed field ablation capabilities.
Capital spending on advanced cardiac procedures can lift medtech demand locally. But offsetting that, we saw nurses publicly express concern about layoffs at another system, which signals operational strain. Those two forces can push procedure volumes in opposite directions.
Quick ESG note. Return to Freedom released a public service announcement featuring Ed Harris on wild horse conservation.
Publicity like that can influence ESG-minded donors and add reputational pressure on land use stakeholders. It's a niche example of how media and celebrity can move attention and funding.
Before we wrap, what's on our watch list for tomorrow?
Analysts will be watching Pfizer for successor announcements and any 8K filings spelling out transition mechanics. For that large-cap tech name, watch follow-through in hourly price action, option flows, and any catalysts that might explain the technical weakness. Monitor flows in leveraged and inverse products to see if today's selling is distribution or a short-term reversal. Confirm timing on the Russell reconstitution that affects Canton Strategic Holdings, and track any DIFC follow-up or bank commentary about challenger bank product launches. Finally, keep an eye on early sell-through data from Costco, Target, Walmart, and the big e-commerce retailer around the announced rollouts and Prime Day promotions.
Quick reactions under 10 words. Big move. Right. Got it.
To sum up, volatility dominated today's tape, and it was concentrated in ETFs and leveraged products, which often reflects mechanical flows rather than fresh fundamentals. Structural headlines continue to favor AI and digital banking as multi-year themes, while distribution wins and ESG stories point to bottom-up growth vectors. And corporate governance events, like the Pfizer finance chief departure, are discrete catalysts to watch through filings.
Takeaways for listeners. Watch filings and succession language for governance risk. Monitor ETF and leveraged product flows for short-term volatility. And treat thematic reports like the DIFC write-up as directional signals rather than immediate valuation calls.
Analysts note that data suggests these are more about flow and structure this week than broad, permanent impairment in any single sector. Investors should perform their own due diligence and avoid treating short-term technical moves as definitive fundamental changes.
Investment disclaimer. A conversation is for informational purposes only and does not constitute personalized investment advice or a recommendation to buy, sell, or hold any security.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
That's it for today's Alpha Recap. We'll be back after the next market close with more headlines and context. Have a good evening.